Ethereum handled Friend.tech frenzy without gas fee spike. Why that's a big deal. Friend.tech, crypto's latest fad, didn't drive up congestion and fees on Ethereum the way frenzies have in the past, possibly a sign that the blockchain's efforts to scale by fostering supplemental layer 2 networks like Coinbase's new base are bearing fruit. Vitalik Buterin and other top Ethereum developers have repeatedly made the case that so-called layer 2 projects, secondary systems that operate atop a blockchain to provide faster and cheaper transactions, could help to reduce congestion on the main network, and therefore fees. The decongestion plan might actually be working, possibly aided by the recent rollout of the U.S. crypto exchange Coinbase's new Layer 2 project, Base, Ethereum, which saw its transaction fees, known as gas fees, reach a yearly high in May following a meme coin mania, has witnessed the fees drop significantly in the past few weeks, with some analysts attributing the decline to the increasing availability of Layer 2 seconds and thus the benefits of the scaling architecture. The decline is remarkable given the recent runaway success of the crypto-fueled social marketplace Friend.tech, a Web3 app that went live earlier this month. Friend.tech quickly attracted more than 100,000 users and generated more than $25 million in fees. In the past, a fad of that magnitude might have come with extreme congestion and a rapid surge in fees. But Ethereum has seen its gas fees drop, in no small part due to the project's existence on the Base subnetwork, rather than the blockchain's main layer. Since the launch of Friend.tech, Ethereum's daily gas fees have averaged 26% lower than they did in the year up to that point, according to data from Falcon X Research. Several older and larger Layer 2 networks, including Arbitrum, Optimism, and zk-Sync, are now handling a large chunk of the transactions happening on the overall Ethereum ecosystem. The Altwo scaling vision is being realized, said Kunal, a senior research analyst at Messari. Less Ethereum congestion. In the past, increased activity on the Ethereum network has resulted in the blockchain becoming temporarily clogged, and high demand usually means higher fees. High gas fees also spiked in April 2022, when Yuga Labs released Other Deeds, non-fungible tokens that represented digital real estate. Ethereum average gas fees soared to about $7,600 GUI, $439 at the time. A more typical range is 15 to 30 GUI. When CryptoKid is a project built on Ethereum where users could buy, collect, and breed digital cats, first launched, the network saw gas fees reach above 900 GUI. In early May, Ethereum's gas fees, what users pay to perform functions on Ethereum, such as sending or receiving the cryptocurrency Ether, hit a 12-month high as the blockchain became costlier to use from investors trading millions for a frog-themed token called Pepecoin Pepe. On one day in May, the fee shot to a median price of 155 GUI. Now, with the Friend.tech crypto craze peaking, the median gas fee on Ethereum is around 13 GUI. And that's partly because the explosion of activity is actually happening off the main Ethereum chain on Base. Friend.tech drove transaction count on Base to a record high of 15.88 transactions per second TPS over 24 hours on August 22, exceeding even Ethereum, along with rival Layer 2 blockchains Arbitrum and Optimism, according to the website L2B. During the peak of the Friend.tech frenzy, Ethereum gas fees actually dropped to an average gas price of 18 GUI. And the heaviest of Friend.tech traffic appears to have now passed, with transactions down 95% from the peak of 38,000 on August 21, according to data from Dune Analytics. Data from Into the Block shows that over the past few months, the number of combined transactions on Ethereum and optimistic rollups has climbed near an all-time high. But the growth came mainly on the Layer 2s. The level of transactions on Ethereum by itself has stayed relatively stable. The dynamic has allowed Ethereum fees to remain at sustainable levels. Earlier, gas fees on Ethereum would spike during periods of high activity, high volatility events, NFT launches, Messari's goal set. Now, the overall Ethereum ecosystem, broadly writ, including its associated Layer 2 networks, is able to support much higher transaction volume. Matt Kunk, a senior research analyst at GSR, said he expects the trend to continue as Ethereum undergoes an upcoming upgrade known as Proto-Dang Sharding EIP 4844, which will make it cheaper for Layer 2 networks to store data on the main blockchain. It's an improvement that will materially increase Altwo throughput and lower the cost of transacting on rollups, Kunk said. Christopher Martin, Amberdata's director of research, notes that Bitcoin transactions have increased since the launch of Bitcoin Ordinals, a method of generating NFTs through a process called inscribing, which may have taken some volume away from Ethereum, further alleviating pressure. Layer 2 seconds have been more interesting lately, according to Martin. Meme tokens such as Bald and Social apps like Friend.tech provide traders with an opportunity to earn high yield, and the ongoing bear market is still unable to draw in users or rebuild traction. All of these factors together seem to have pulled out a lot of the excitement that NFT collections were able to generate just a few years ago, which were able to cause extremely high gas and transactions, according to Martin.